Hello and welcome to another episode of our From the Helm series. I'm Grady Wolf, market analyst with Bell Direct. Bega Cheese shares have been on an impressive run this year with a rise of 50% year to date and up 72% over the last 12 months. Growth in domestic milk production and skimmed milk powder pricing, or SMP pricing, are driving tailwinds for the historic Australian brand. Today I am thrilled to be joined by Bega Cheese CEO Pete Findlay. Pete, thanks for joining me today.
Grady, thank you for having me. I'm looking forward to catching up.
Firstly, the Bega Cheese share price has been on an impressive run this year. What do you attribute this rally to?
Oh, look, Grady, I mean, we just try and set out to deliver what we said we're going to deliver in our 5-year plan. And so we're sort of just about to hit the 2-year mark. And I think, the market's been reasonably happy with effectively the first 3 reporting periods against that plan. So hopefully the market's feeling a bit more confident in our end game and the targets that we've laid out for 2028. So I think we came through a really difficult 2023, 2024 with significant cost increases, and that impacted our profitability significantly, and we relied on passing a lot of those cost increases through into the market. And I think there was some trepidation about whether we could do that or not, and whether our brands would stand up. But we've proved that over the last 18 months we've been able to do that and restore the branded business to a baseline of profitability that everyone's pretty happy with. And then, I think we've done some heavy lifting around the bulk business, and the market was able to grasp that the underperformance of that business last year was really around some fairly extenuating circumstances. So I think as we've started to collate more data points that sort of give our strategy a little bit of resolve, the market's come behind it.
Now, we have seen an increase in SMP pricing and futures pricing for the product. How does this provide a tailwind for Bega?
We've seen only relatively small increases. That does help. That does help our bulk business. So we've sort of always said that our bulk business sort of has two purposes in life. One is to support inputs into the branded business, which it does, and then the other is to monetize effectively what's byproducts and or broadly byproducts in the global marketplace. So Australia consumes more fat than protein, so we have an excess of protein left over that tends to find its selling form in skim milk powder. So we've got away from some really low points in the skim milk powder pricing cycle probably 10 months ago, and we now sit at solid pricing, not as high as we would like, but solid pricing. So that does help our bulk commodity business, which lost money last year for the first time, certainly since I've been in the business. But we've anticipated that it will make a small profit this year. That's sort of the guidance we've given, and that skim milk powder helps underpin that result.
Now, from a financials perspective, the Bega balance sheet is in the best shape it's been since FY19, including paying down a lot of debt in FY24. How does this position Bega into FY25 and beyond?
Yeah, so for the last 3 or 4 years, we've sort of brought the leverage ratio down from 3.5 times EBITDA to about 1.4 at year end, and then we'd like to drive really close to that 1 level this year as we continue to generate cash. So that puts a whole lot of stuff into play, which is terrific. It allows us to think about sort of larger capex initiatives if they were to arise, or M&A if it was to arise. So it just gives you a lot more optionality. It also potentially gives us the ability to return to shareholders through the usual mechanics. So it was always sort of an effort when we're at 3.5 times leverage to get it down, and I'm really pleased to say that we sort of don't have that overhang with us at the moment, which is great. So it really just gives us.
How have you and the team navigated the higher input cost environment whilst maintaining competitive with pricing?
Yeah, so that sort of comes back to that piece I was talking about in the first question. So it's been really difficult. We had cost increases of over $400 million really during a 6-month period. So if you look at our profitability, our guidance is around the $200 million mark for earnings, EBITDA. this year. So that was a significant cost input to navigate our way through. Around that 23-24 period, it was around lifting prices strategically in a constructive way across our portfolio of brands and categories, still allowing us to be competitive against the competitor set here in Australia, understanding our pricing architecture across our different brands and categories and how that linked in with the competitors. So we navigated all of that. We're in a very different environment now, though, Grady. So what we're seeing is, distress with the Australian consumer, or a level of distress with the Australian consumer. And so the price increases we put through sort of 12 or 18 months ago, we're having to find a different way now to grow our top line. And we're doing that through good brand innovation, very strategic promotions that link back into operational leverage within our business that allow us to still drive results to the margin line, but do it on more of a cost per unit basis through increased volume. So it's obviously the same objective, but just driving it through different, flipping the way we do it. Price just probably won't be an option, I don't think, for the next 6 to 12 months. It'll have to be done through efficiencies and driving volume in parts of our business where we have got operational leverage.
How has the Lion Dairy acquisition delivered financial and operational gain for Bega Cheese?
Look, we're really pleased with that acquisition. So it took a couple of years couple of years longer than what we would have liked, mainly because we were hit with that really difficult trading and inflationary environment. So coping with that sort of probably stalled us a little bit, but we're absolutely ecstatic with what the business did last year. We have now exceeded our business case, for that acquisition. It links really well with our bulk business, and we just continue to see operational benefits that we can continue to bear. So we think there's lots of cost savings and efficiency savings we can drive back into that business. But we're pleased with how our brands are standing up, and they continue to provide us, a really good platform for growth in key categories. So, yogurt is resonating really well with the Australian consumer. Functional beverages, even in our white milk and milk-based beverages, Australian consumers are leaning towards higher protein, more natural, functional beverages, which is great. And so we think there's some nice little tailwinds there that we probably didn't see when we first bought the business.
Now, Bega did increase the dividend paid to shareholders in FY24. Why did you decide to increase the dividends in this time?
The financial performance of the company was on the improve. As I said, we beat the year before only by a small amount, but our branded business was fully recovered back to that baseline that now readies us for more incremental growth in that space. We thought that the disconnect between farm gate milk prices and commodity pricing was at its end, and so we sort of saw a brighter future. The balance sheet was in good shape, so we thought it was appropriate that we try and reward shareholders, and we will consider all those factors again at this year's, as we start to bank this year's result.
How has China's slow recovery post-pandemic impacted Bega Cheese, if at all?
Yeah, it does, because it's probably driving down or holding skim milk prices and commodity pricing in a fairly static level. So, Chinese demand plays a role in that, but we see our future in Asia more and more in our branded product, and in particular probably Southeast Asia. So, Japan's an important market for us. We continue to do well there, but really Southeast Asia and the Middle East are where we're seeing strong growth. So China's good. We've had some good wins with Sam's Club and going direct to retailers and food service outlets in China, but we're seeing really exciting growth across places like Malaysia, Thailand, Indonesia, Philippines, and the Middle East. And so, that's probably our main focus from a brand point of view.
And what does the remainder of FY25 and FY26 have in store for Bega Cheese?
So look, I think that the Australian consumer will continue to be, challenged over the next 6 to 12 months, and so, we need to be really cognizant of that. We need to be continuing to bring innovation to bear that keeps us relevant. We need to continue to be competitive on our pricing, and therefore driving, a lot of our growth, bottom line growth, will come with efficiencies. And so we're racking and stacking those, and we like to take a number of bricks into each financial year. It gives us optionality to deliver growth on our bottom line. And so I'd say that there's a fair bit of focus on driving efficiencies through our business. And the good thing is, with our footprint, we talk about streamlining our sites and our footprint. We think there's lots of opportunity to do that.
Thank you for your time today, Pete, and we hope you enjoyed that episode of From the Helm with Pete Finlay of Bega Cheese. If you did, be sure to subscribe to the Bell Direct YouTube channel to stay up to date with all market commentary, exclusive interviews and insight pieces.